So when it comes to getting sniper entries in your trades, it's one of the things that every trader feels is a holy grail. And so what I'm going to do in today's video is just cover how I get sniper entries, especially when things like order blocks and fair value gaps don't give you the best risk to reward and the best, sniper entries, especially when order blocks are really large or fair value gaps are too large. And that means that just because you want to keep yourself safe, make sure you don't get your stops hit, you increase your stop loss. So I'm going to show you how you can actually combat that with this strategy. So the first thing you want to do is you want to come to the charts and obviously identify a setup where you're looking to sell or to buy. So we're going to go through a selling example, but the opposite and the exact opposite is true for the buying example. So as you can see, we've got structure moving to the upside. If I just break down somewhat of why we're taking a selling trade, for those that don't know, we have a breaker structure over here. Price was moving up, trending to the upside. It's come into an area of interest for us. Usually areas of interest tend to be taking out significant highs for me, which, to looking to the left or looking to the right, tends to be liquidity areas such as Asia high, London high, New York high, stuff like that really. Or it's entered a POI, so a point of interest, a zone, a higher time frame, fair value gap, a higher time frame, order block, or whatever it is. So let's just say we have something like that over here. Actually, I'm not going to draw it out just to avoid confusion. But when we're looking for the sell trade, generally we're looking for something like a fair value gap. Okay, so now let's say this is a fair value gap over here. So obviously opportune and the best entry would be right at the top here, right? Because that means we can lower our stop losses and get that maximum risk to reward out of the trade. And that's what we want, right? We want to maximize our risk to reward so that for every winning trade, we win more. For every losing trade, we lose less. Big problem, right, is if your fair value gap is this big, it's going to be so difficult to maximize your risk to reward. And that's where, you see a lot of people walking out of a trade with a 1 to 2 or a 1 to 3 when they should have been getting a 1 to 5 or a 1 to 6. Now, the other problem is, and I'll do this in another color, is let's say, let's just move this down a bit actually. Let's move it to here, and let's say over here, right? Let's do this. And let's change the color to, let's say a bluey color. Now this is your order block. So that's your fair value gap. This is your order block. So now if you're a trader who trades from fair value gaps, I mean, if you're entering, say, let's be a bit more realistic here, that means your stop has to be this big. Has to be this big where you cover the fair value gap, but as you can see in this case, you'll probably get taken out. But it'll be wise to cover the order block as well, and so your risk to reward is not going to be the best. Now if you're an order block trader, you get a better entry, but your stop loss has to be above your order block or above some recent high or whatever, and then again you get an entry like that. Order block entries tend to be better than fair value gap entries from a risk to reward perspective, especially with a smaller stop loss, because they tend to be more in the extreme than a fair value gap. But this is the common problem we come across. And in the example I'm going to show you above, you'll see why this is such a common problem, and it's probably a problem you've come across in your trading as well. So what we're going to be doing in essence to combat this is really simple. So first of all, I want you to get your Fibonacci retracement tool. Now you're probably thinking, oh, Aaron's just going through Fibonacci, but trust me, this is a bit different. So we're going to go through our Fibonacci retracement tool. Okay, and as you can see, I haven't drawn this to scale, especially with this point. So we're just going to do something like this just to push it up. So as you can see, we have our Fibonacci retracement tool. I want you to mark out, and preferably in a different color, the 0.786 and the 0.88. Now this area here is what I call the golden zone, and it's the golden zone for sniper entries. And the reason why I call it that is because when you're marking out highs and lows and structures and stuff, price tends to come and rebound off of this area. I know the 0.618 is an area that people look at as well, but for this strategy to get sniper entries, especially with confluences of order blocks and fair value gaps as we have here, we want to be using the Fibonacci tool as an extra confluence to get those sniper entries. So for example, in this case, obviously it's an example, but you would have been entering from the order block, you get 3.49 to this low, but from the Fibonacci retracement, you can see you've improved that to an 8.71. Obviously, these numbers are not realistic. I'll go for an actual example above in about a minute or so. But you can see the power of utilizing Fibonacci's in looking for sniper entries in your trades. It's so simple. It's so easy, yet loads of people go over it, and you know, you're leaving R on the table there. You're leaving percentage profit on the table there, and you don't want to be doing that. So let's go through an example.
Top.
Okay, so I literally said above, and I actually meant above my drawing. So as you can see, we have this price action. Price is moving to the upside. We get a breaker structure over here. I'll just mark it out. Obviously, you can say this one here as well, but we get a bigger one over here as well. We know price is looking to go down, right? It's raided the Asia high. It's raided some highs to the left here. There was liquidity built up to the left like this. We could also say this is liquidity as well. It's raided it. It's come into some area here. Let's say it's an order block. We can say it's an order block. It is an order block. It's tapped into there. You know, it's I was gonna say covered some fair value gaps, but it's not there. But we are more interested in not the analysis behind the trade, the actual sell. So again, if you're looking to take the trade from an fair value gap, this is your fair value gap, right? It's too large. It's too big. It's not the sniper entry, right? In hindsight, it's not the sniper entry. But now let me just change this to this color. Let's go white. But we have an order block here, which is great. Beautiful. And as you can see in this example, you know, we push up. I'm not sure if you've traded gold before with order blocks or fair value gaps, but you tend to get spikes. And so you always go for the safer stop loss. So the stop loss would have been here anyway. But let's just highlight this in a different color. Let's go back to the blue example. Now, as you can see, if you took the trade from the fair value gap, and oh wow, if you did, your stop loss is massive. Your risk to reward, which would have been for me the Asia low, is a 2.28, which is not great. And I know there's a lot of people out there that face this problem all the time. Is you're taking trades, your stop loss is too big, your risk to reward is low, and it's like, is it even worth it? And then you disregard the strategy when actually you could have optimized it by optimizing your entry. So let's just forget that. Now let's say we take the trade from the order block. And this is what I call the order block here. The last candle before an impulsive move that breaks structure. So now we have a 4.45 risk reward, which is great, right? You can't complain with that. But we can further optimize it. And the problem with this is look how much deeper it goes. If price is going at least 50% into or more of your stop loss, that means you have the opportunity to refine that stop loss further. And so that's where I did my research, and then I looked at and found the golden zone. Oh, that's actually bang on. I was going over this earlier, and as you can see, this is low. But anyway, the golden zone. Boom. Look at that for an entry. Now let's move this. So that's 4.45. The other one was 2 point something. Now if I move this up, you're taking home 7.76 R. The other one was 4.45. That's more than 3 R that was left on the table because you didn't optimize your entry. And now by adding this as your entry model and as a confluence to get better sniper entries, I mean, it's a no-brainer, right? You just made an extra 3 R by optimizing your entry strategy. And honestly, that's all I wanted to go over in today's video. Go out there, have a look, implement the golden zone, 0.786 to 0.88. Let me know what you think. And just before I end the video, as you know, I've released a journaling software and analytics software. Go out, check it out, sign up. We've got a 3-day free trial. Let me know what you think. We have a major update coming to absolutely revolutionize this software to the point where it's going to be everything you realistically need. So again, make sure you sign up and let me know what you think. But anyways, I hope you enjoyed this video. It's a bit different to the normal ICT focus videos I've been doing. Let me know if you like these types of videos where the tips and tricks can be used by everyone, and I'll see you in the next one.